Hey, hi everyone. Hi, testing, testing. Okay, cool. Yeah, so I started the webinar a bit earlier today because I just want to make sure everything's working fine. The screen is working fine, audio is working fine. So just bear with me today. Hi, Christopher. Hi, I think more people will join in a while. So we'll just wait for everyone to join and then I will start today's webinar. Well, you just wait for one more minute and I can start. It will be like 5:29. Okay, I see a lot of you here already, so maybe I'll just start the webinar a bit earlier today and then we can end it a little bit earlier. So hi everyone, welcome to today's webinar brought to you by IC Markets Global. Okay, we're gonna do a live trading session. Today's the 25th of August. As usual, I'm glad that you guys are here. I'm happy that you guys are willing to take out this time to learn. Hi AL. Hi. Okay, for those who are here on a usual basis, you notice that my setup is a little different today. I only have one monitor today. I usually work on two monitors, okay, but I forgot to bring the charger for my other monitor. Okay, so I'm gonna be working with one monitor. It shouldn't change anything other than you guys can see me do whatever in the background, but other than that, it shouldn't uh, change anything. Hi AJ. Okay, and one more thing is I'm actually not in my usual webinar spot because I had a doctor's appointment today. I did not expect my doctor's appointment to take so long, so I'm actually doing this at my doctor's clinic. They're nice enough to offer me a small little room to do this, so if you see people or hear people, let me know. It's probably one of the clinic staff. Okay. Yeah. Okay, I'm just gonna start so that we can end a bit earlier and I don't need to take up their office space. Oh, so many people today, 15 people. Okay, cool. Once again, welcome everyone to today's webinar brought to you by IC Markets. You guys know how this works. Before I even talk about anything at all, you know that I need to go through the disclaimers. So the disclaimer is, oh, sorry. The disclaimer is very straightforward. I'm gonna stay here for a minute so that you guys can read it, but it's basically to remind you guys that these webinars are purely educational. It is purely educational. Yeah, it is not any kind of financial advice, investment advice, or any kind of like buying or selling signals group. Okay, this is not a signals group. Whatever I share with you guys today is purely my own personal style of trading and strategy within as a trader. Okay, it does not mean that my style of trading is the only way of trading. When I share with you guys whatever on the live charts, just please take it as a learning experience. Okay, please do not take it as a signal to get in and out. Other than that, I just still want to confirm that everything is working. I myself am on YouTube on my phone and I'm watching. It seems like audio is working, it seems like the video is working, it seems like the screen is working and everything's working. So I think everything should be good. Thank you, Christopher, for confirming. For the rest of you, any time of this webinar, if you see any technical glitches or anything, let me know. Again, sorry, usually I do this in an office, but I had a doctor's appointment today. I really did not expect it to be so late, so I had no choice but to just do this here in my doctor's office. Okay, so I'm gonna continue with introducing your host, which is myself. My name is Cassandra. You guys can call me Cass. I am an investment analyst and a prop trader. So I know some of you have been following me for years and you already know who I am. For those who don't know who I am, I'm gonna do the introduction now. Yeah, so an investment analyst is someone who I'm with this team at Everest Fortune Group where we do a lot of backtesting, a lot of research, and a lot of forecasting of where we think the markets are going. We have been the finalists for the best Forex and the best equity research for multiple years running. Okay, so our team we spend a lot of time on the charts. We basically look at the charts a lot. Like if you do a 9 to 5 job or 9 to 6 job and you spend all that time doing whatever, we spend our 9 to 6 staring at charts. Okay, not staring at charts, but like deciphering where the charts are going, where the markets are moving, looking at technical analysis, looking at news, and basically anything to do with trading. Okay, other than that, I am a prop trader. So for those who don't know what prop trading is, for me it means that I trade for multiple different companies. Okay, to become a prop trader, when I became a prop trader, I had to pass multiple tests to get it. One of the tests required me to do 10% profit within 30 days. That means 22 trading days. Okay, because Saturday and Sundays are not counted, so it's actually 22 trading days within the month. I had to do 10%, and I've done that like multiple times already. It's actually not as hard as people make it seem. It's actually very doable. If you think about it, if every week you do 2% or 2.5%, you will end the month at 10% profit. Okay, so you don't even need to do like dramatic numbers. It's just very simple 2.5%. Okay, how long have you been trading for? I have been trading for, I am now, let me think, how old am I? Okay, I have been trading for 9 years now. I started my trading journey 9 years ago. I joined one of those courses where you had to pay a few $1,000s to join like a 2 days, 3 days course, and they basically teach you rubbish. They basically teach you motivation and like rubbish, right? So I was one of those people who paid those courses. Let me tell you, do not pay for those courses, please. Just learn whatever you can from these webinars. There's a lot of free resources out there. You don't need to join these courses. I think in that entire 2 days course, I learned candlesticks and I learned moving average. Needless to say, all that money I spent did not make me a profitable trader. I only became profitable, I think, about 4 to 5 years into my journey. So the first 4 to 5 years, I was not profitable. I was losing a lot of money. Well, not a lot of money because my accounts were small, but I was losing, consistently losing actually. So it finally came to a point where hi Buddha Lama, hi. It finally came to a point where I'm just like, okay, you know what? Enough is enough. There are obviously people who are making a lot of money out of this. I need to know how they're making the money. So that was the time where I sat down. I decided I will only study trading as much as I will study trading and investing very rigorously until I become profitable. So then after a year, I finally became profitable. So I would say I became profitable on my 5th to 6th year in trading, which was just few years ago for me. Okay, so if you are not profitable yet, just know that it just means that your strategy or whatever you're doing is not correct, and that's okay. It's okay. You first need to identify where you're not doing it correctly and then tweak your strategy so that you can get it right. Okay, so if you're not profitable right now and you think this is the journey and you want to continue down in this journey, you can. It will make you a lot of money, but you need to put in the time and the effort to find out. Okay, so again, for those who just joined, again, I usually do this in an office, but today I went for a doctor's appointment. it went over short, so I had no time to rush back to the office. I decided to just do this webinar here at the doctor's clinic. They were so nice to give me this room to like do this webinar. So if you guys hear like outside voice, it's probably one of the staff talking. Just let me know, okay? I'll mute myself if it's like distracting. Okay, yeah, I just really had to rush for this. Okay, so our agenda for today is key approaches, cheat sheet checklists, and live charts. Okay, key approaches, cheat sheet checklists, and live charts. So for the key approaches, I basically touch on how I get my setup on a normal day, and then, I mean, that's when we go to live charts, I'll show you how I get my setup on a normal day, and then we can look at the cheat sheet checklist. For those who are here every week, you already have this. For those who are not here, like this is your first time here, if you've never seen this before, let me just explain a little bit. Okay, usually if I look at the attendance list and I see like everyone's like the regulars, I don't really explain this, but I see new people here today, and I also see like the attendance coming, like there are people coming in and out. So this is more for the new people. Okay, so as a trader, my first job is to look for trend. Okay, again, sorry. Whatever I'm sharing with you guys is purely my own strategy, okay? Another professional trader might come into this webinar and be like, no, that's not how you do it, okay? There's no right or wrong, it's just whatever makes you profitable. It doesn't matter if I do it this way, it doesn't matter if another trader does it a different way. As long as at the end of the day, we are both profitable, that means that way is working, okay? So I'm just sharing my way of getting profitable. It is not the only way to become profitable, okay? I'm just sharing my way of being profitable. It is not the only way to be profitable in trading. Okay, so first things first, I am a trend trader. That means I need to verify or understand where price is moving. It is very important for me as a trader. If I can answer this question, means I have won 50% of the battle. Why? It is so important. If price is going on an uptrend, that means I am going to get in for a buy. If price is going on a downtrend, that means I'm going for a sell. Okay, this is so important to me because as a trader, I do not want to go against the waves. Okay, I want to follow the waves. If the waves is pushing me up, I want to buy and follow the waves up. If the wave is pushing me down, I want to follow the waves and sell. Okay, but that being said, I do know people who go against it. I personally know someone very close to me who, when I am buying EURUSD, that same person is selling, but at the end of the day, we are both in profits because he is selling when there's a pullback and I am buying when the price is just going up. Okay, so there is no right or wrong, but my style of trading is to look for trend. Okay, to look for trend. How do I look for trend? I use so if you guys are following my mouse, I use trend lines to identify if it's an uptrend or downtrend. Then I use our channels. So channels, you need 2 touches on the top and 2 touches at the bottom for it to be a valid channel. If these two are done, then I would know if it's an uptrend or downtrend, and then now I look for horizontal levels. So when I say horizontal level, I mean pullbacks, overlap, significant swing highs or swing lows. Okay, this will help me identify key levels that will end up becoming my take profit, my stop loss, and my entry. Okay, next thing I do is using technical analysis, some tools that will help me find confluences. So death or golden crosses, meaning using simple moving average, any natural moving average that you can see from the charts. Look for stochastics and RSI. So when I use stochastics and RSI, I'm basically using divergence or looking for support and resistance zones. Okay, so divergence means that if price is going up on the charts, but on the stochastics or the indicator it's showing that it's going down, it means that the indicator is trying to signal to you as a trader that price might be doing a reversal soon. Okay, the next thing I do is use correlation. So correlation means that, okay, for example, Canadian dollars is going up. I want to find a correlated pair or something that will give me more information on that. Usually I go and look at oil. Why? Because Canada is a very big producer of oil. So if Canadian dollars go up, usually oil prices goes up as well. If oil prices goes down, usually the Canadian dollars goes down as well because the currency is very correlated to this commodity. Okay, other correlation for crosses, you can do Australian dollars and New Zealand dollars. Usually Australian dollars go up, usually New Zealand dollars will follow. Not all the time, but most of the time. Okay, once I'm done with doing my analysis on the charts, I will then decide whether I want to do a reversal or a breakout. For those who have been following me for a long time, you know that I usually do reversals because I've done a lot of backtesting and on reversals, and it works really well for me. For breakouts, I've done backtesting on it and I can't seem to find a strategy that works. So therefore, my style of trading is a lot of reversals and not so much of breakouts. That means if price is going up, I wait for the pullback to end. At the end of the pullback, then I get in for a buy. I don't wait for price to do the break of structure thing. Okay, so that's it from our introduction. I'm gonna go straight into trading view. Everyone can see my charts, right? Okay, right. So I've pulled out a few charts. The first one is ETHUSD, which is Ethereum. I want to do one cryptocurrency. The second one is EURUSD, which is one forex pair. And then I'm going to do one commodity, which is XAUUSD. The problem with these three pairs is that you can see it's against the US dollar. Okay, so I've pulled out a fourth pair, GBPJPY. Okay, which is not US dollar related. Why? Because I don't want everything to be US dollar related, because if you're wrong for one, you're gonna be wrong for three. Okay, I mean, not necessarily, but the idea is that if US dollar is going one direction, usually all three will go in one direction. Not necessarily, but it makes sense that way. Okay, so I mean, look at this. Look at XAU USD and look at EURUSD, where it's almost as if we're looking at the same charts, right? Because they're both against the US dollar. That's why, hi Jamilu, hi. That's why I pulled out GBP-JPY, which is a non-US dollar pair, so that we have a variety of things that we can do analysis on. The last thing that I pulled out is DXY, which is the US dollar index. Okay, the reason I pull this is so that I can do the correlation thing, because if I am shorting EURUSD, that means that I plan for DXY to go up. If I am buying EURUSD, it means that I plan for DXY to go down. Okay, and the last thing is, if you guys are looking for a pairs, please, whatever pair you look for, please use IC Markets charts, because then it will be the same spreads as your account. Okay, everyone good for now? Just checking the chat. Okay, cool. I'm gonna start my analysis. So other than these 1, 2, 3, 4 pairs, again, I'm not really doing analysis on DXY, I'm just using it as a reference. Other than these 4 pairs, if you guys have any specific pair you want me to look at, please let me know in the chat box and I'll pull it out and we can do analysis together. Otherwise, I'm just gonna do on these 4 pairs. Usually, whatever time I have is only enough to do 4, unless I do it really quickly. But otherwise, yeah. Okay, let's start with ETHUSD. So you guys know, for those who have been following me for a long time, I trade ETHUSD with Elliott wave. Okay, so ETHUSD and XAUUSD, these two I use Elliott wave. For those who don't know what Elliott wave is, Elliott wave is a style of technical analysis that I do. So like Elliott wave, let's say Wyckoff method, let's say the what is this one? This one, I can't remember the name of this, but yeah, it's just basically a different technical analysis. So for ETHUSD, this is what, oh, okay, stop. I don't want to use that. I was just trying to show you guys. I think it's called a Gartley, right? Okay, so for ETHUSD, what I have identified for ETH on the weekly, I may be wrong, but I mean, I've been following this for a long time. I hope I'm not wrong. is that price is moving in A, B, C, D, and then, oh sorry, 1, 2, 3, and then 4 and 5. So how do I know that this is a 1, 2, 3, 4, 5 of a Elliott wave? So they are guidelines for Elliott wave, which I cannot go through with you guys today, but if you guys want, you can just Google, just type Elliott wave guidelines or whatever it is, and then you will see all the guidelines online. So usually what Elliott wave is that there's this guy named Mr. Elliott, I cannot remember his first name, but he has identified that price, when he zooms out and look at the charts, he noticed that price is constantly moving in a 5-wave pattern. Okay, it's constantly moving in a 1, 2, 3, 4, 5. Okay, they are guidelines and they are rules of how it moves, but basically he noticed that this is what is constantly happening on the chart. Okay, so right now, after the 1, 2, 3, 4, 5, he also noticed that it does a ABC. Let me change this to a different color, maybe red. Okay, it does a ABC, which is a pullback. It basically is a 1, 2, 3, 4, 5 is the movement of where trend is, and then followed by the pullback. After the pullback is done, it starts again with a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, so it's 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, ABC. Okay, this is what he noticed that keeps happening on the chart. So right now, I'm not going to explain too much on how I got this, but what I've identified is that price is on a 1, 2, 3, 4, 5 for Ethereum. Okay, so based on the guidelines, how do I know that we are on the correct wave count? So there are 3 rules for Elliott wave. The first rule is that 4 cannot surpass 1. So 1 and 4 is really far away. That rule has not been broken. 2 cannot surpass the start of 1. So you can see 2 has not surpassed 1 and that rule has not been broken. And 3 cannot be the shortest wave. So 1 is already shorter than 3 and therefore it is valid. The rules are valid. Okay, the rules are valid. Okay, so based on the guidelines, 2 is usually 50% of 1. So if I pull out Fibonacci from the start of 1 to the end of 1, you can see that 50% is here. You see this? 50% is here. And price pulled back exactly at the 50% and continued up. Okay, so based on the guidelines of Elliott wave, wave 2 has fulfilled the usual requirement of wave 1, which is 50% of wave 1. This is usual requirement. Okay, the second requirement guideline is that 3 is usually 1.618. Okay, sorry, my mouse is not working well or something's not working well. Okay, it's 1.618 of 1. So if I pull out Fib trend-based extension from the start of 1 to the end of 1 to the start of 3, and I pull out 1.618, where's 1.618? You can see price went there and then it started to have, wait, is this even correct? I remember it was way better. It started to have like a pullback happening. So it's not as obvious here, but you can see on the daily it's clearer, you see? So price came here. Here at 1.618, you can see a reaction happening. Okay, you can see a reaction happening. That could be the start of wave 4. Okay, that could be the start of wave 4. So then what do we do with 4? The requirement for 4 is that it usually, not all the time, usually pulls back to 38.2. Okay, I'm going to get rid of everything, and I'm only going to keep 38.2. It usually pulls to 38.2. Sometimes it only pulls to 23.6. But it usually does not surpass 50%. So you can see after the 3, which is here, I'm going to move that. After the 3 that was here, price pulled back at the 23.6, meeting the minimum requirement for based on the guidelines of Elliott wave. And then now this could be the start of 5. Okay, we could be in the 5 right now. Okay, I mean, there are a lot of signs that are pointing that we are in the 5. Okay, so now that we are in the 5, what is the guidelines for 5? I am just remembering offhand, okay? For those who are very versed with Elliott wave and you can remember other guidelines, let me know. 5 is usually 1 to 1 of 1. That means 5 is the same length as 1. Okay, so how do I measure that? I'm going to go to this, the third one, pull out trend base fit extension, pull from the start of 1, the end of 1, and the start of 5. And I'm going to pull out 4. Okay, so based on the guidelines of Elliott wave, Ethereum should end its 5 waves here. Okay, it should end its 5 waves here, unless I am on the wrong wave count. Unless I am on the wrong wave count. Why? How come I can be on the wrong wave count? Because it could be that 3 has not ended. It could be 3 is not ending. That means 4 has not ended and then 5 has not started. Okay? It could be, but I'm just based on what I think has already happened. I think 3 has ended, 4 has completed, and then now we're in the 5. Okay? It would also make sense. Why? Because there is a rule for Elliott wave is that if 2 was long and draggy, okay, if 2 was long and draggy, usually 4 ends fast. If 4 was fast, that means it came here and then it did a quick one and came back. Usually 4 will be long and draggy. Okay, so 2 and 4 is usually inverse. We can see that the 2 already did a long and draggy thing. It actually dragged out the entire month of May to June. So it lasted a whole month. So we could have completed 1, 2, 3, and then 4, and then now we're in a 5. Or if I am on the wrong wave count, that means that 3 has not completed. Now price is still trying to complete 3, and then we will eventually do the 4 and then the 5. Okay, so I don't know which one is correct, but based on the guidelines is that 3 has completed because the usual guide is 1.618, right? Sometimes it does 2.618, sometimes it does 3.618, but most of the time it does 1.618. So based on most of the time, based on the common thing that happens, 1.618 has completed, and now we are in the 4 is completed, and then now we should be in the 5, and 5 should end here. Okay, based on 1 to 1, 5 should end here at 5.5 thousand, unless I'm on the wrong wave count. Okay, unless I'm on the wrong wave count, then yeah, then this whole entire analysis is wrong. But assuming that I am on the correct wave count, which I assume that I am, Ethereum should end at 5.5 thousand before we start the ABC. Okay, before we start the ABC. So I'm going to change this to red so that you guys can see. ABC looks something like this, and then after the ABC we're going to start with 1, 2, 3, 4, 5 again. Okay, but that's a long way to go. We're not going to talk about that right now. We're talking about right now. So assuming that my analysis is correct, assuming my wave count is correct, that means Ethereum is still on an uptrend. So now that I know on the overall that it is on an uptrend, okay, I know on the overall that this is on an uptrend, that means I want to get in for a buy or sell. Can you guys let me know in the chat box? I just want to see if you guys are still following me. I just want to see if you guys are paying attention. If I have decided that Ethereum, if my analysis is showing that Ethereum is on an uptrend, should I be getting in for a buy or a sell? Let me know in the chat box so that I know you guys are still following me. I know that you guys can hear me loud and clear. Anyone at all? Okay, thank you, Chunmilu. Thank you, Jordan. Okay, yes, so it is a buy because I want to be following trend. I want to be following trend, therefore it should be a buy. Okay, so Now that I know that I want to get in for a buy, my job as a trader is I wait for the pull. Like I said, I am a reversal trader. I am a reversal trader. That means I wait for price to reverse. If price is moving on an uptrend, I wait for it to reverse. Once it's done with it reversal, here I get in for a buy. Okay, this is where I get in for a buy. So I know it's going to go up. I want to get in for a buy. The question now is, where do I get in for the buy? Okay, I already answered my first question, which is it going up or down? I know it's going up. Now I want to know, if it's going up, where do I get in for a buy? Okay, there's two ways to do this. There's two ways to do it. The first way to do it is to use this checklist. Is to use this checklist where I pull out horizontal levels, I pull out channels, yada yada yada. I use this, but my style of doing it is to use, you can also use Elliott wave. So for those who are not very familiar with Elliott wave works in 8, 1, 2, 3, 4, 5. Within 1, 2, 3, 4, 5, there is also 1, 2, 3, 4, 5. Okay, within 1, 3, and 5, there's also 1, 2, 3, 4, 5. There are subwaves within subwaves within subwaves. Okay, so there's two ways to analyze this, but I'm going to analyze it the Elliott wave way, where I calculate the subwaves within wave 5. So it always starts with wave 1, followed by wave 2, and then 3, and then 4, and then 5. Okay, 3, 4. I'm assuming 4 is going to end here because 4 cannot surpass 1. Okay, remember, based on the rules of Elliott wave, 4 cannot come into the zone of 1. So the zone of 1 is here. 4 cannot be below here. If 4 goes below here, it means that I am immediately at a wrong wave count. I'm definitely at a wrong wave count. So I need 4 to be like somewhere above here. Okay, so just based on the rules, I already have a rough idea where 4 is going to end. It's definitely going to end above here. Okay, so if I'm following this, then I already know that we're in a 1. If 1 has ended, that means we're in a 2. So based on the guidelines of Elliott wave, okay, so I cannot remember everything. There is nobody who can remember everything. I can just kind of memorize wave 2 guidelines. Okay, I don't know what reference this is, but let's say we find a wave 2 guideline, okay, and you find one that is a reliable source and one that is good. Okay, usually wave 2 guidelines is that, okay, this is the one that I like to use. Wave 2 guideline usually pulls 50%. I cannot find it, but I'm trying to show you guys how I usually trade because I reference a lot. I do reference a lot, and I don't want you guys to think that you need to memorize everything. I don't want you to think that you need to be a genius to be good at trading. You don't. You just need to know where to get reliable information. Okay, you just need to know where to get reliable information. This is one that I use a lot. Okay, I don't know where it is right now. Okay, wave 1 and wave 2. Okay, so 2 wave do not retrace more than 61.8%. Okay, it usually does not retrace more than 61.8%. So how are you going to pull this? You're going to pull fib retracement, click the start of 1, pull it to the end of 1, where you think the end of 1 is going to happen, pull out 61.8% because it cannot retrace more than here. Okay, it cannot retrace more than here. So whatever happens, you just know that price cannot go lower than 4.4 thousand. Okay, it cannot go, okay, it's not that it cannot go lower than 4.4 thousand. It's just that it doesn't usually go lower than 4.4 thousand. It does not usually go lower than 4.4 thousand. So the guideline for wave 2 is actually, I cannot find it right now, but it's actually 50%. Yeah, so 50% is, I was just trying to show you guys how I usually do it, but yeah. Basically, after wave 1, it will pull back somewhere between 38.2 to 50%. This is the usual thing that happens for Elliott wave. So it usually pulls back somewhere around here. Okay, I'm gonna highlight this box so you know that this is where things usually happen. Extend to right, and I want to, yeah. I'm gonna get rid of everything else so that you guys are not confused. It usually pulls back to this box, but more likely within this green box, okay? It can pull back anywhere from here to here, but more likely it will pull back to this green box. Okay, so right now we are already in the green box. We are already in the green box. So if I am in fact on the correct wave count, that means we are now already in the buying zone. Okay, this is a buy zone. This is a buy zone. We are already in a buy zone. So I expect price to do this. 1, 2, wherever it's gonna end, we'll talk about that in a while. Then 3, how do I know where 3 is gonna end? We follow the guidelines. And then 5. How do I know where 3 is gonna end? There is guidelines. Just follow the guidelines. Wave 3 usually ends 1.618 of 1. Okay, so 1.618 of 1 is, we're gonna pull this fib extension, the start of 1, the end of 1, and the start of 3. We don't know where the start of 3 is, we just know it's gonna be somewhere within this box. Okay, the start of 3 is somewhere here. I'm just gonna assume it's somewhere here. So we already have a rough idea of where we think 3 is going to end. It might end somewhere here, and then pull back, and then continue with 5. Okay, I know it's not very exact to where the 1 is, but these prices are usually indicative. It's usually a range. It's usually a range. Okay, it's usually a range. So 3 will end somewhere here. Somewhere here. If I am on the correct wave count. If I am on the correct wave count. Okay, so now I know where to get in my buy. Yeah, this is, if you trade Elliott wave, it's a little bit more work compared to the other style of trading, but I think it's a bit more accurate than the other style of trading if I'm on a correct wave count, of course. Okay, so I know this box is somewhere I'm going to get in for my buy. Where exactly? Okay, now we go down to the smaller time frame to see if we can find anything. Okay, now this is where I pull out this one. This is where I pull out horizontal levels, trend lines, chart, stochastics, RSI. This is where I pull this out so that I can find confluence on the charts to get in on this buy. Okay, so now I find horizontal levels. I'm gonna pull out this box. There is a swing high right here. There is a swing high right here. There is a overlap here. Okay, so I'm just gonna highlight that entire thing because I don't know exactly where. So I'm just gonna highlight this entire thing from this swing high all the way to this overlap. Okay, so I know price is gonna pull back somewhere within this box. Where exactly in this box? That's why you keep narrowing down and narrowing down and narrowing down until you find a slot that makes a lot of sense. So I know price is gonna pull back somewhere in this pink box, sorry, green box, somewhere in this green box, but more likely in this blue area. Okay, so we're gonna narrow that down. We're gonna narrow that down. No, sorry, I'm not gonna narrow it down because it could pull down anywhere in this green box, but more likely somewhere within this blue. Okay, so because there's a 50% here, it makes me think that it's going to be here at the 50%. Okay, it makes me think that it's going to be here at the 50%. So I'm just going to, based on Elliott wave and based on whatever information I've collected, assume that price is going to pull back to this 50%, and here I can enter for my buy. Okay. Okay, one more thing is I want to pull out indicators just to see if we're at the support resistance area. Yeah, I think the 50% is where it is. Okay, so there's two ways to use stochastics and RSI. I use it, one is to look for divergence. Divergence means that if price is going up on the charts and on the charts price is going down, it means that there's a divergence and the indicator is signaling to you that, hey, there's going to be a possible trend reversal. Okay, the other way that I use it is by looking for support and resistance zone. So this is the last support and price is on its way to that support, and when it reaches here, price is expected to bounce. Okay, so if price comes down a little bit more and this comes down a little bit more, that would align very well for the support for RSI, and then price can bounce. So I'm pretty happy with this entry right now. Yeah, I'm pretty happy with this entry. This is where I'm gonna get in for my buy. I mean, tentative buy. Okay, so buy. I'm gonna get rid of everything so that it's not messy. After I do my analysis, I usually get rid of everything because it's like it's so messy, it's so confusing, and then I just watch it play out if it plays out. Okay, because I know I have a rough idea where I'm gonna get in for my buy, right? I have a rough idea of where I'm gonna get in for my buys. Now I need to put my stop loss. So my stop loss is gonna be right under this zone. You can do two stop loss. I mean, if you want to be very safe, you can put it under the green zone, right? Because I said price can reverse anywhere within this green box, but most likely in the blue box and more likely at the 50%. Okay? So based on probability, to be very safe, you can put it under the green box. That's just being very, very safe if you want to. But I like to play my stop loss very, very tight. So I'm going, how do I get rid of all this? I'm going to put my stop loss here. Sorry, I need to get rid of everything. It bothers me. I need to put my stop loss here, right under the blue box instead. Stop loss, okay. So I'm gonna put my stop loss here. Like, I like to play a tighter stop loss, and I'm gonna put it straight back at this last swing high. Obviously, the potential is 5,005. But if you put it at 5,005, you wouldn't be day trading or scalping anymore. Not even 5,005, this part. Yeah, 5,005. Obviously, the take profit is way higher, but just being conservative and just doing like a day trade or scalping trade, I'm only aiming for the last swing high, which is here. Okay, I'm just aiming for the last swing high, which is right here. Okay, so I expect price to do this, do a very nice rejection here. I mean, honestly, it's already in the blue box. It could just reverse right now. It could reverse right now, but I'm assuming that it will reverse slightly lower. I'm just hoping that it reverses slightly lower. If it comes down slightly lower, this is where I'm going to get in for my entry. Sorry, I had to mute myself. There were people talking behind me. For those who don't know why I'm in this situation, again, I usually do this in an office, but I had a doctor's appointment today. You know how you go to the doctors and they make you wait for a very long time? They tell you your appointment is at 3, but you end up going in at like 4. They make you wait like a really long time. So I had to wait a really long time, and I didn't have time to rush back to the office to do the webinar. So I asked them if I can just do the webinar here in their clinic, and they offered me this small room, but I can hear people talking behind me. Okay, so yeah, I'm hoping price just pulls back a little bit more, right? And then I want to get in and I'll buy, and I'll buy just back to that swing high. Okay, so if it's just back to that swing high, long position, I'll put this here, and we got a 1 to 4 risk to reward, which is pretty healthy, to be honest. It is a very healthy trade. 1 to 4 is one that I would love to get in on. Okay, so if you have $100,000 account, and you risk 1%, you are going to lose $1,000. Okay, if you win this trade, you are going to make $4,000. So I make $4,000 and I lose 1. Risk to reward is great. This is a good trade. Probability wise, do I think this is a high probability setup? I think I am very confident with the direction. It's just that the entry is just somewhere in this blue box. I just don't know exactly where. I just know it's somewhere in this blue box. Okay, so I'm going to aim for it being at the 50%, but it could still be somewhere within this blue box, or if not the green box earlier on. Okay, so that's all I have for Ethereum. I'm gonna quickly do XAUUSD. XAUUSD is still on a wave 4. Okay, so I also use Elliott wave to do analysis for XAUUSD. Okay, Elliott wave, if wave 2, again, if wave 2 did wave 1, did a fast one, it's gonna quickly do wave 3, and then wave 4 is going to do a long, draggy, slow one. It is inverse. So if wave 2 was a long, draggy, slow one, then wave 4 is going to be a fast one. Okay, so wave 2 was a fast one. If you retrace, wave 2 was a fast one. That's why wave 4 right now is doing a long, draggy. It's been dragging for a long time. It's been like 16th of April. Oh my gosh. It has been going sideways for since 16th of April. Okay, so wave 4 is usually the wave that will bore traders out. It usually likes to bore traders out. It likes to kick people out of the market because people are so bored they cannot trade because price keeps going sideways. Unless you trade on the sideways market. Unless you trade sideways market, then you cannot use Elliott wave anymore. You can use other methods. You can use Wyckoff. So those who don't know, I think that's how I spell it. Wyckoff method. Wyckoff method is a method that allows you to trade within the sideways market. Okay, I personally don't use Wyckoff method I have not done back testing on it. I don't use it on a daily, so therefore I'm not going to try to trade the sideways market. But if you are someone who wants to trade the sideways market for XAUUSD, you can go and consider learning about Wyckoff. Wyckoff will teach you where to get in for the buy, will get in for the sell, get in for a sell, get in for a buy. Okay, Wyckoff will teach you all of that if you are trading the Wyckoff method. But I'm not trading it, so what I do is I wait for wave 4 to end so that I can get in for wave 5 for Elliott wave. Okay, so what I think is happening with Elliott wave on XAUUSD is that we are doing a DXY. So Elliott wave usually moves in 1, 2, 3, 4, 5 followed by ABC, but not all the time. Sometimes it moves in 1, 2, 3, 4, 5 followed by ABC, followed by ABCDE, followed by WXY, or followed by a WXYXZ. Okay? Okay, so there are many variations for wave 2 and wave 4. Okay, so as a smart trader, you should not be trading wave 2 and wave 4 because there are so many variations. Wave 1, 3, and 5, which is the impulsive wave, will always do 1, 2, 3, 4, 5 no matter what. Wave 2 and 4 will do so many different variations. So the variation that I think it is on right now is W, X, and Y. For those who have been following me for a while, you know that there's been a few variations that I came up with. I initially thought that this was an ABC. But then I thought this was an ABC, but then some things showed me that it's not ABC. Then after that, I thought it was an ABCDE. I thought it was an ABCDE. And then certain things showed me that it's not. So now my conclusion that it's on the WXY. That's why you don't trade wave 4, because it's so many variation and it's so complicated. Why do you want to try to figure it out? Why don't you just wait for it to end and go and trade other stuff? There are so many other stuff for you to trade. You don't have to just stick to one chart. You don't have to just stick to one pair. But anyways, I'm just going to do the analysis for XAUUSD, and then I'm not going to trade it, but I'm just going to do the analysis. So WXY, within Y, X and Y, there is A, B, C, D, E. Okay, usually there's A, B, C, D, E. How do I want the waves. Okay, there. Okay, usually there is a A, B, C, D, E. Once the E is done, that is when 1, 2, 3, 4, 5 starts again. Okay, so we need to wait for 1, 2, 3, 4, 5 to start before I can consider getting for a buy. Right now, I don't want to play within the sideways market because it's dangerous, because there's too many variation, and this is not what I am good at. Okay, you do not have to force trades. Do not force trades. Do not force trades. Just give me a moment, guys. I just need to charge my laptop real quick because I don't want it to die halfway because we do have like 10 more minutes left. Okay, it's charging. Yeah, it's charging. Okay, so what I'm gonna do now is just wait for XAUUSD to show me a clearer trend. I'm gonna wait for this craziness to end for XAUUSD. How do I wait for it to end? Usually when I know ABCDE has started and 1, 2, 3, 4, 5 has started is when there is a break of the triangle. So once there is a break of this triangle, which I'm not drawing very nicely, obviously I can draw it better and then it will look nicer. Okay, let's assume that, okay, let's assume this is a triangle. Okay, once it breaks the triangle and breaks this high or this high, you know that for sure we are in a wave 1. Okay, this is a wave 1. And then wave 2 is going to be the pullback wave. After the pullback, then there's a wave 3. So for me, I personally only plan to get in for wave 3. Okay, I'm going to wait for 1 and 2 to end, and then I only get into wave 3. Okay, some of you are asking, why don't I play the wave 1? Why don't I just wait for E to end? And then from here, you get in for 1. You can, if you want, you can. That is one trade that you can consider taking. It's just that it is way, way, way safer to only get in once the triangle has broken out. But once the triangle has broken out, it's already too late because price is already halfway to the end of 1. So I'm just gonna wait for 1 to end and then come back to 2, and then at 2, then I get in for 3. Okay, so right now for me, there's no trade for XAUUSD. I still do analysis on it every week because I still want to see if it's already broken. You never know. Maybe next week I see you guys, it might have already broken, right? I don't know, but like that's why I still come and do analysis very often on XAUUSD because I want to keep monitoring and seeing that if it's already broken a triangle. Once it's broken a triangle, that means I need to start to get ready for the buy. Okay, I need to get ready for the buy. Okay, but it has not broken yet. That's why no trade yet. For those who want to trade within the triangle and want to trade within the sideways market, you can. Elliott wave is not the one for you. You need to go and learn Wyckoff. You need to go and learn other things. Okay, different circumstances makes you need to use different technical analysis and different styles of trading for different circumstances. So when we are in a wave 4, Elliott wave cannot do anything for you because you need to wait for wave 4 to end. Okay, you need to wait for wave 4 to end. But if you want to trade the sideways market, you can trade support and resistance. You can trade, sorry, I pressed the wrong one. Where is it? Okay, you can trade within the support and resistance. You can trade within the triangle. You can trade whatever it is. There are different styles and different ways of trading. That's just not a style that I usually use. Okay, so next will be, I'm gonna quickly do this two and then we will be done. Okay, so this two, when it comes to Forex, anytime it comes to Forex, I no longer use Elliott wave. When it comes to Forex, that's when I do the normal conventional way, which is to look for trend. So higher highs, higher lows. We are clearly on an uptrend. That means I want to get in for a buy. I need to monitor to see that if we have reached any of the high, because we can be an uptrend, but there will be resistance. Okay, so let me see. Very big resistance here actually. We are already in a resistance zone. If price goes any higher, it would need to do a breakout. It will need to do a breakout of this structure. It needs to do a BOS, which is a break of structure. Okay, whether it is strong enough to do that, I don't know, right? We need to pull out other things to know. But right now, it doesn't matter because we are on the daily time frame. Right, we're on the daily time frame, and I think we are here to day trade or scalp. So it doesn't matter if on the long run it can break this or it will reverse. We just want to play this small little movement within this box. Okay, so to play that small little movement, we need to find the trend first. I'm biased that it's on an uptrend. It's just that we are now reaching a resistance zone. So there could be some resistance and price could be turning back. But on the smaller time frame, I do want to try to get in for a buy. Okay, very strong resistance actually. I think price will probably try to go back here one more time and then do another reaction like this. I mean, if it's strong enough, it might break through, but there's that resistance here because price came here, price came to this area one time, two times, three times, four times, five times. It came here five times, so I think it would want to come here one more time, the sixth time, to test whether it's okay, or it came here five times and it realized that it cannot break. Now it's going down. Okay, so that's where we need to do proper analysis. Let's see what the XY is doing. Yeah, it's a downtrend. Like, do you see this? This is a very clear break of structure. There is a lot of downwards pressure. That's a lot of downwards pressure. So DXY looks like it's going down. US dollar looks like it's going down, therefore giving us a little bit more confident that price might want to go up. Okay, so now I want to find my entry for a buy. Need to look for swing highs and swing lows. Structure is not very nice anymore. Structurally, it's not very nice anymore. Price came here one time, two times. Okay, structurally, it cut through this entire structure, which is not good. Okay. Give me a sec, guys. Actually, I might want to do a sell. Because even though price is going on an uptrend, I might want to do a sell because this might be a pullback. Okay, if I had to come up with an analysis, a fast one for EURUSD, I think I'm going to do a quick sell actually, just to play the structure, right? Overall, I think it's an uptrend. Overall, I think it's an uptrend. It's just that in this small little area, I think it's going to do a pullback. Pullback to where? Usually it would want to pull back to the last swing low, okay, usually, but to be very conservative because it seems like we're going against trend, we just play it back to this overlap. Okay, is this a high probability setup? We'll see. Let's pull up some indicators. No, it's not looking good. I cannot give a setup for URUSD. I don't see anything. Nothing makes very clear sense to me. I know this is a resistance. Okay, I know this is a resistance. The only way I will get into EURUSD if it does a break of structure, confirming that there's going to be upwards movement. Okay, a break of structure, and then when it does the retest, only at the retest, then I will consider getting in for a buy to here. Also be somewhere here. Okay, that's the only one, but right now at this current point of time, I just don't see anything, and I do not want to force myself to see anything, because if you have to force yourself to see something, that means it's probably not going to be high probability already. Okay, it's probably not going to be high probability. Okay, I've actually don't have enough time, but same. So GBP JPY is still going sideways. It's been going sideways for a long time now. I just highlighted this a while ago. It's basically my sell entry, but I was not gonna get in. I see a sell entry here. If price comes in one more time, you can consider getting for a sell. Sell it to where? Here. Stop loss just above here. Okay. This, do I think it's a high probability setup? It's not a very high probability setup, but it is something you can consider. Okay, so that's all I have for you guys today. Thanks for joining. Thanks for joining, guys. Take care. I will see you guys again in a week. Okay, bye, guys. Bye. Thanks, Jordan, Jamilu, Buddha, AJ, AL, Christopher. The one that I have confidence in is definitely EUR USD. Sorry, ETH USD. XAU USD is still waiting for that breakout. They are different techniques and different strategies to play within the sideways market. I'm just not doing it because I have not done backtesting on that. But ETH USD is something that I will consider getting in on. EUR USD, I mean, structurally it's not great. Like, what do you want? Do you want to go higher? Do you want to go lower? Structurally, it's not giving me a lot of information. I think it wants to go higher, but it needs to break this area, retest before I can confirm it. GBP JPY, you can play the sell. I mean, I might consider playing the sell only because there's this very strong resistance happening here. Okay, so that's all I have for you guys today. Thank you so much. Take care, everyone. See you guys next week. Bye.